Hey, nice jacket, bro. But you seem very sad. What happened? Nice jacket, it seems. Today I went to the bank and a very sad, strange thing happened to me. Strange thing? What happened? I'm planning to get a new car, no? So today I went to the bank and when I went there was a guy sitting next to me with my exact same salary as well. But he got offered an interest rate of 10%, and when I went to get my loan, they asked me for an interest rate of 16% and said that I was a very risky customer, bro. Risky customer. If the bank guy said that to you, it must mean that you have a very bad CIBIL score. Are you someone who desperately wants to avoid such a situation happening in your life? Then one thing you'll have to do is to improve your CIBIL score. A CIBIL score is like your financial report. Remember when you were in school, you would have a report card which judged you based on your academic performances of the current year. Similarly, a credit report or a CIBIL score is a simple number and an accompanying report which talks about how good you are as an individual who can manage their credit cards and their loans in a proper way. So welcome to the third video in MarketFeed's Personal Finance 101 series with me, Ajay, and here we'll be talking about how you can improve your credit score in just 30 days. Your CIBIL score is a simple number between 300 and 900, and here whatever is higher is better. And you as an individual, you should always try to have a CIBIL score of at least above 750, and 800 and even 850 also is possible for you. So let's get right into how CIBIL score is calculated, what all are the factors which impact the score, and how you can start off with improving your CIBIL score in a very organized and fast manner. So when you approach a bank to take a fresh loan under your name, be it a personal loan, a credit card, or even a house loan for that matter, what they'll first ask you is for your salary slip or your ITR report for the previous financial year. And also with this, they'll be checking your credit report right there sitting at the system. And the higher credit score that you have, the lower interest rate that you will get, and the higher chance of your loan getting approved. So since that is clear, let's get into the first major factor which affects your credit score with a 30% weightage, which is payment history. Here's the fun part. Suppose you're going to take a first time loan, you do not have any credit cards of your own, you do not have any EMI payments at all, then you will have a credit report or a CIBIL score of -1. And here you'll have to slowly build this payment history as you go along in your loan taking journey. So this is a primary factor where you can improve your credit score as well. So even if you're someone who has a lot of loans, this payment history part only accounts for whatever loans that you've taken in the past, whatever credit card dues that you've had in the past, and how in a well timely fashion you have paid off all your dues. So the only thing you'll have to do here is to pay all your dues on time. Make sure that you do not miss any single payment, because every single time that you miss a payment or a due, your credit score gets impacted by a huge margin here. And as the number of proper payments in your whole financial report increases, it will automatically increase your credit score. I know this is against the common thinking that you should not take any loan at all, and if you take a loan, your CIBIL score will be affected. But here I am telling you that you should be taking a loan, you should be taking a credit card, but you should be paying it off in a timely manner so that your payment history is proper and intact. But then comes the second part which could affect your credit score, which is your credit exposure. So with a 25% weightage, this credit exposure talks about how much amount of loans you're taking. So suppose you're someone with a small salary and you're taking huge loans under your name. What does this mean to the banks? This means that you're someone who is probably over leveraged, and that going ahead into the future, you might have troubles repaying all of these loans. So definitely make sure as an individual, you do not take unwanted loans under your name, which can definitely impact your credit score in a worse way. So here I'll introduce a concept of credit utilization ratio. So it speaks about how if you have a credit card or if you have a credit line under your name, you should not be using more than 30% of your credit limit. So this means that if you're someone with a credit limit of 1 lakh rupees under your credit card, you should not be using more than 30,000 rupees of this available limit. And again, if you want to hack this credit utilization ratio and improve your credit score, I would suggest you to get more credit cards. Wait, what? Because if you're spending 1 lakh rupees and your entire credit limit was just 1 lakh rupees, how much is your credit utilization ratio? It is 100% and your credit score will definitely be affected by it. So here I'm telling you to go ahead, if you have the enough salary slip and if you have enough documents to support it, go to the bank, ask them for a credit limit increase or even apply for a newer credit card. In that case, suppose you're still continuing to spend 1 lakh rupees under your credit card. If you have an increased credit limit of 3 lakh rupees, your credit utilization ratio will definitely come down and hence it will improve your credit score over time. And again, this hack will need to be used very carefully. If you're someone who's having a lot of overspending in your life, do not try this. I would suggest you to cut back on your spendings first before trying this out. Now, the third factor which affects your CIBIL score with again a 25% weightage is your credit type and duration. There are two general credit types that you should know about. One is a secured loan that you can take and other is an unsecured loan that you take. Generally, all kinds of loans which are backed by some collateral like a gold loan, maybe even a house loan, are called as secured loans. And something that does not have any backing, like say a personal loan or even a credit card, they are called as unsecured loans. So the more number of secured loans that you have in your credit report, it means that you have some sort of backing, and these are not just leveraged loans that you have. Suppose you pledged 1 lakh worth of gold and you're taking a loan. It will still show up in your credit report, but again it will show up as a secured loan and hence it will improve your credit score. And in the other side, if you're taking lots of credit cards, lots of personal loans which are unsecured and there is a risk to the bank, understand the entire concept of CIBIL score is about judging how risky you are as a customer for future potential loans. And if you have huge unsecured loans in your account, that means you're a risky customer. So now comes a part of credit duration which talks about how long you've had all your loans and credit cards for. So here comes another hack. Suppose you're someone with multiple credit cards and you want to reduce the number of cards and consolidate all your accounts. So the hack here is that do not close off your oldest credit card, because the bank wants to know how long you have had your loans for and how well you have paid it. And these older credit cards that you maybe took when you were very young, these are the credit cards that will improve your financial journey by improving your credit score. And now comes a fourth and last factor which talks about the number of loans, the multiple number of loans that you have under your name and the number of credit inquiries that you have made to banks or financial institutions. Every time you walk into a financial institution and you apply for a credit card or a loan, the bank or the institution makes a hard inquiry under your credit report. This means that they're fetching your credit report, and this hard inquiry that they've made will stay in your report for multiple years. So do not apply for loans for fun. I've seen a lot of people, just to judge how much loan can they get in the future, they just make a loan inquiry to understand the same. And this will definitely affect your credit score in a really bad way. The easiest thing that you can do, check your credit score beforehand. No matter how many number of credit reports that you take on your own, these are called as soft inquiries. These are the things that you see on Paytm, on Cred, or even on Google Pay. These do not affect your credit score at all. So I'll consolidate all the tips for you right here. Make sure you check your credit report and your CIBIL score always. Make sure you pay your bills on time. Make sure you do not make huge payments on your credit card which could affect your credit limit. Try to increase the number of secured loans under your name compared to unsecured loans. Make sure you avoid unnecessary loan applications, and at last, do not close your old credit accounts. So now that you got to the final part, let me give you 2 additional hacks that can improve your credit score very easily. So the first thing is to take a credit card by keeping an FD as collateral. So these are called as FD backed credit cards, and what they'll do is they'll accept a FD under your name. Let's say you put an FD of rupees 50,000 and they'll give you a credit card for 80% of the FD amount. And once you start transacting with this credit card, you start paying off all your bills in a timely fashion, your credit score will automatically improve. And the second concept is called as credit piggybacking. Suppose you have a good credit report under your name and you want to pass this on to your next generation, maybe to your son who's just turning 18 as well. This happens automatically whenever you go for an education loan, right? Because suppose you're a student who does not have any credit report at all, and when you're going to the bank, they'll give you the education loan, but they'll ask you for a guarantor. And once you start paying off all the loan dues, your credit score will automatically improve and reach a really good state. So you started off as someone with no credit score at all, and by using someone as a guarantor, the same works in the case of a credit card as well. You can automatically improve your credit score. You can also check your CIBIL score very easily online just by going to the CIBIL's official website. So after you scroll down to the bottom, you'll be seeing a page where you can get a free credit report of your own directly from CIBIL. I would suggest you never pay for taking a CIBIL score under your name. And no matter how many times you check your own credit score on Google Pay, Paytm, Cred or anywhere, it is okay, and this will not affect your credit score at all. In fact, this will ensure that you're being a very responsible individual, you're keeping track of your credit score, and hence you can do these actions that can improve your CIBIL score in the future as well. So there you have it, the ultimate guide to boost your credit score in India. So make sure that you follow all the tips in order and you'll automatically see your CIBIL score getting better and better every single month. Thank you for watching. This is Ajay Adit signing off. See you in another video.